right. Hopefully everyone can hear me loud and clear out there. Sorry for the interesting late start there on GoToWebinar for that announcement. But anyway, hope everyone's doing okay. I know, boy, if you're not careful right now, you might take some bumps and bruises. So we're going to try to eliminate that. And we're going to talk about how to thrive in a trader's market. More like how to survive these days, it seems. But thrive we have done. And so we're going to be sharing that experience with each and every one of you today. You get a look at a systematic approach that we have to tackle the stock market. And it's important maybe to let you know right up front that this is also part of a trading room that we have here where we get together every single day and talk about the same things that you're going to see in this webcast. So that's a nice little value add. We'll talk a lot more about that at the end. So with so many different opportunities these days, let's call them, I think it's important right out of the gate to let you know if it's worth sticking around, right? So you're in the right place right now if you currently dedicate or want to dedicate a portion of your portfolio to short-term trading to grow your portfolio faster, or in days like now, at least provide some nice hedging so that your portfolio doesn't run roughshod against you if you're not careful. And boy, I tell you, I don't want the term or the two words there, short-term, to cause too much confusion. We are not talking about day trading here. We're talking about days to weeks in terms of lengths of trade. Okay. So short-term, yes, that is still very much on the short-term end of the spectrum. But we do some intraday trading from time to time when it is appropriate to do so. But the vast, and I mean vast majority of the trading is going to be days to weeks. All right. So by doing that, it's going to allow us to do what we're saying here, which is to adapt and thrive no matter what the market's throwing at us, in particular days like, or weeks and months like what we've had here very recently. Very few and short upbursts and more pronounced and more significant downturns. Yeah. Is what the market has been doing. And so we need to try our best to adapt and thrive under those conditions. And that means we've been doing a lot of looking at potential shorting positions, which could, of course, equate to put options, things of that nature. We've also been doing a lot of our heavy lifting over the last few months with contra ETFs. We've also tried to be long geopolitical situations like oil, gold, these kinds of things, and have done quite well with a number of those trades as well. But more on that in a second. And what allowed us to pick all that stuff up fairly quickly is going to be the tools. So before we get there, my name is Steve Chappell. I'm the Director of Trading System Development here at VectorVest. I've been with the company now more than 22 years, and it's been quite a journey. And as part of that journey, Dr. Bart DeLito and I, with the late Dr. Bart DeLito at this point, and I used to travel the globe together. And the most common question that we used to get at any seminar or event was, gee whiz, this looks like an incredibly powerful platform you guys have there. But what's the holy grail? What's the number one top technique, or what's the best strategy, to deploy in this current market that we have now? Bit of a loaded question, because there are about a baker's dozen techniques that tend to just work really well all the time. But there's always what's working the best right now. And so we built the tools that you're going to see in this webcast to really address and focus on that main concern. And so I in particular, am just a small part of a very well-oiled machine here at VectorVest. This is our team. And we all take pride in delivering the best stock market guidance you can get anywhere at any price. And today, certainly no exception, as it's free, at least what you're going to see within the contents of this presentation today. So hopefully it will leave some impact on you, as I'm sure to cover the current market situation and a lot of things to kind of be on the lookout for over the coming weeks. All right, so let's get right to the nitty gritty at this point. What you're going to need to be able to do all these things, to thrive in particular, and survive at times in which you should, is you're going to need the right tools that will allow for you to do that will allow you to adapt and therefore thrive in any market condition. So let's get over into VectorVest actually before we start addressing any of that. And we can see the current situation here. Of course, Google had a pretty good report. There's been a lot of really good reports, actually, that have been sold even as of late. Kind of disturbing on that front, too, isn't it? When you have, say, Google, for example, who got sold down on a portion of their business that represents 1% of their income. It's just crazy. So you really have to have pristine earnings reports as you're going through these troubled times with all these geopolitical events that are out there. The stock market has totally changed dynamic here. And you need to look no further than this first tool, which is the overall platform, to really notice that. I mean, everything's red, right? NASDAQ is up a little bit today on some strength off of, I can't keep all the names together in my head right now. There's so much going on. But good report out of Amazon, actually. Amazon. And largely because of their amount of their capitalization and presence and everything, that's really why the NASDAQ is green at all today, just to be quite honest. There's certainly going to be some supporting characters that took advantage and participated in some of the rally, but that was the main contributing factor. So what we do have across the top of what we call our color guard here are 3 red lights. And so it's indicative here still that just from a big picture standpoint, we don't want to be, trying to buy your average ordinary stocks out there, even the ones of the highest caliber right now. We can try to participate in some if that particular market segment appears to still be participating, like petroleum, for example, and some others. But by and large, we do not want to be looking for stocks right now to be purchasing. What we want to be doing instead, the low-hanging fruit, is looking for shorting and or contra. If you've never heard of a contra ETF, it's an ETF that you can buy. You can do them leveraged or non-leveraged, and they move counter to the direction of the underlying stocks that they account for. So you can do an inverse or contra fund on the NASDAQ, for example. And if you were inverse the NASDAQ today, so far you would be down, right? But the closer we get to the close here, by the end of the day, it might actually be up because the index will be down. So you can do it counter to indexes. You can do it counter to specific things like semiconductors, all those different things that are out there. We are right now controlling inverse funds on banks or financials, inverse funds on the S&P, inverse funds on small caps, and also real estate, as just some quick examples. Okay. And the reason we will continue to at least hold them through this weekend is that everything still points down in the stock market so far. Now, we can take a more granular look at that when we talk about meeting together in a trading room every day. We also want to account for the current situation. So this is your current situation, but more from a close-to-close perspective, quite honestly, in that a lot of the signal that you're going to see here doesn't really solidify to the close anyway. If we get over to this tool here called the Derby, this is specific to the trading room. And when we come, so not every subscriber has this. We'll learn more about that at the end. When we come in here, we can then check the intraday perspective on what's happening. So we have this Derby timing indicator that's meant to be for the entire stock market. Okay. You can see 2 bars there. They are 0 to 2. Above one is favorable. Below one is unfavorable. So bearish trades are favorable, and by a good margin today is what that's telling you, just in general. If we scroll down a little bit further, we'll also have some pie chart information down here. This takes all of the strategies that are in VectorVest to either buy stocks or sell short or buy contras or whatever the case might be. And then it accounts for, all right, how much participation essentially is there and to what magnitude, is that participation. And we can see the participation is not only bearish, but to great magnitude, actually. Okay. Then what we can do is come over here to the top and say, all right, now that we've firmly established that I'm not looking to be buying stocks today. If anything, I'm looking to sell short or buy puts or, whatever the case might be there. The direction is down. It's bearish. What are some of the better opportunities in the stock market right now? When you see numbers like that on the left, when we come to the green bars, these represent 10 stock baskets, and each one of those 10 stock baskets has a theme, right? So for example, the top one is a bearish strategy, and it's looking for stocks that are already sinking, right? That have generally poor fundamentals. So when we click it open, then we can see, all right, what 10 stocks are pushing this basket to the widest margin of victory for the day, right? And it's these 10 stocks here. And so then you could even start to say, all right, well, man, I'm pretty interested then in CRISPR and Peakstone, whatever the case is. Or, hey, look, I'm interested in all of them. Let's spread our bets around here a little bit. Out to the right, you can see a bit of an equity curve or performance for the day. We can even see this information pre-market. I've got that turned off right now, but you can see it pre-market as well. And we often get a lot of shopping lists ready, for example, for the trading day before the market even opens, using this same kind of concept. And then you can, for whatever reason, maybe you're not comfortable with the price points here, or the fact that they're, maybe there's a lot of biotechs in there or something, and you're not comfortable with it. You just keep kind of clicking down. Next, what's the next most valuable strategy in VectorVest right now? And then what stocks are in here? Do I have a higher comfort or less comfort because they're even lower in price? See what I mean? You just keep going. And, eventually you're going to land on one near the top here. You don't want to go too far down the list. You're getting deteriorating performance. So you're trying to balance that there a bit. Generally speaking, we encourage just staying right at the top and looking for good candidates, just right there. And what we want to do for sure is avoid what's at the bottom fishing type strategies, very risk on type strategies. That's what you're going to find at the bottom down here today. Okay. So it also then gives you a lot of themes, like, what's moving? Is it high cap? Is it tech? Is it, nothing's moving? Is it all shorts? Are contra ETFs viable right now? I don't see a contra ETF basket here at the top. If we keep going down a little bit, here's one about, I don't know, looks like it was about 12 down the list or so. And then you can start thinking about looking at all of the items that are in here. If there's something in here you don't know what it is, like JPST, it says JP Morgan, looks like ultra short, but I'm not sure. You can right click, view stock analysis report, and it'll tell you JPST is an actively managed fund that aims to maximize income and preserve capital using USD denominated debt securities with an effective duration of 1 year or less. And then you can decide, do I want to be short or long this to be short? Those instruments. You've got an inverse to NVIDIA, for example, that looks like a 1 1/4 time. They're just slicing and dicing the stock market as many ways as they can, aren't they? My goodness. I think I was okay with the 1, 2, and 3 times, but now we're doing 1 1/4, 1 1/2. It's just starting to become nonsense, I think, at this point. But anyway, that's a story for another day, right? I also thought daily options were going to be nonsense as well, and they largely are for most people. So they're going to do what they do. We do what we do, and we try to coach you the right directions. So we can give you the little nuanced type information like, hey, this is a pretty risky at times short strategy, whereas something like worst stocks over 10 is generally, smoother, steadier, downward pushing stocks that literally are the worst out of the 9,000 stocks that we track. So generally speaking, if markets aren't performing well and you're looking at, stocks that just don't have the fundamental support to be at the prices they're at, like Upstart's really worth, I think it's less than $4, still trading at 23. Lots of people still want to go out and try to buy it. It's just way overpriced, guys. A lot of these things are, okay? And that's kind of the dilemma that the stock market is in overall, just to be quite frank. None of these stocks should be overvalued at this point. But that's where we are, okay? So those are still great opportunities. And, right away, hopefully you've already got a sense of, hey, very quickly, this tool has told me, hey, we're bearish from the big picture. We're bearish from the intraday picture. Here are some opportunities. And I can literally just take the top 10 that are up there at the top, I just want to make sure that I am consistent in the direction that it suggests. I either want to sell short or buy puts or do bearish credit spreads or whatever the case might be, right? But it's going to give you the underlyings or to do any of those actions. And you can look at more data. So if you say, well, one day doesn't necessarily make a strategy great, I would actually very much agree with that. We can provide our own natural guidance, having been here, like for me, for 22 years, and largely help point you the right directions that way. The other thing that we can do is say, hey, look, the tool itself can give you that answer. So if we want to say, instead of just today, we want to say, what's been the best strategy for the last 10 days? There's a number of different ways we can come up with that. This is largely the best idea. What if I would have bought or contributed in any of these strategies each and every day for the last 10 days until now? Well, you just come in here, make sure that you get, that might be 10 days there. Oops, 9. All right, so you got 10 days here, right? You say, well, hey, look at that. Worst stocks over 10. Didn't we say just a moment ago on the one day that that's generally, one of the better ways to go? And worst stocks over 20, in my experience, actually does a little better, but all of the best opportunities when this downturn started have come and gone. They're below $20 now, most all of them, So this one's beginning to fade a little bit, where you're still picking some of that up here with worst over 10 is the most likely scenario there. Okay. So we can put color behind a lot of this stuff. You'll also see, contra ETFs have been not the best solution. And that's that leverage component, where when we say worst or best of the contras, that implies there's going to be leverage on those things, right? They've even been doing the West or the worst. So you can do a counter trade, or you can do a what's hot trade, and so leverage is going to be a big factor there when we say best or worst and we talk about contras. All right. So enough about all that. Let's get to the current picture and help paint that out a little bit more, just to give you an idea of the kind of guidance that you're going to get. Should you decide that this is something that you're going to want to do and that we can help you with. Okay. So looks like Jerry might have drawn this out today. I don't know if I had that on there. I wasn't in the trading room this morning. Jerry D'Ambrosio was the coach today. We do mix it up. It's either me, Glenn Tompkins, or Jerry D'Ambrosio who guide this room, and only those three for now. We are going to look to add a fourth, but we make sure we get them all trained up. Okay. So there's a lot of things happening on this chart, actually. So we started getting very bearish on this market as a result of this little pattern that you're going to see right here, which is called a head and shoulders. When a head and shoulders triggers, that's when it falls below the midpoint of the two interim lows. So you got left shoulder, head, right shoulder, right? When it falls below that midpoint, you're generally going to at least run the distance. They do tend to overshoot, and that's what you're seeing now. It's overshooting. They do tend to overshoot, and if we come back to the left, this might even be more fascinating to you, is how symmetrical markets move. So all the while, you did see some bounce right here, and it was at a logical spot. Okay. What you'll also maybe less so notice is that this is also the right shoulder of an inverse head and shoulder pattern. So when this fails, this bullish global pattern on this upturn is failing. That means the market is likely to become exceedingly more bearish, literally as we're talking right now. Okay. But at the same time, the market is also pretty oversold, right? So it's not like we're going to landslide down, from here necessarily. There's going to be bumps and things along the way. But the big picture is, the market has certainly tipped over to a noteworthy perspective at this stage. Now, some segments of the market are leading this and some are behind. So the S&P being the 500 best companies, if we were to look at the S&P, if you want to know when all heck might break loose, that would likely be Let's hope it doesn't, yeah? But that would likely be if you start to break around 3,800 on the S&P, okay? But right now you're still on the head and shoulders way down on this market segment. It's just been the more resilient. Makes sense. This is where 28% of the index is represented by the Magnificent Seven, or whatever they want to call them, right? So this one's just starting to tip now, essentially. All right, so that's the kind of guidance, insight, that kind of stuff that you're going to get there. But what do you do with that information? Well, you're not bullish. You're more so waiting for some kind of major catalyst. I don't know, resolution to the two wars that are out there, a more accommodative Fed. Whatever the case who knows, right? It's impossible to judge what the catalyst is going to be before the catalyst shows itself. But until we have an improvement to the morale of the stock market here, largely right now, you're in the mode of sell the rallies, essentially. So there could be some short, quick upside opportunity. We are certainly going to be looking to take advantage of that ourselves from time to time. But predominantly, there's a fundamental shift here in the morale of the stock market. The interesting thing, is that earnings, I'm sure if you're VectorVest subscribers, which probably most, if not all of you are, you should be acutely aware, hopefully anyway, that earnings are actually still quite strong. It's just all this geopolitical events and, everything, right? From Congress to now two wars. Some people take it as far as World War, whatever the case is, higher commodity prices, inflation still sticky, the likelihood that Feds will have to at some point here continue to raise interest rates, all these things are starting to weigh in. And so until a way out shows itself, that's the mode that the market's going to be stuck in. So I don't want to talk any longer about that. That's it's not cheery stuff, but it's the stuff that matters, right? And it's the stuff that you're going to get in this room if you decide to be a part of it. So if we look at, markets are down, right? But if you are looking at inverse funds, we talked about them. I like putting pictures to words, right? So they go up when those other things are going down. We're in SPXU, we're in TZA, we're in FAZ, we're in DRV, right? So they go up, they rise when the markets that they represent fall, okay? Now, these are all levered. This is a trading room that I'm talking about, so we get into the levered stuff there. But we also talk about you don't have to lever any of this. You can go to viewers. You can go to watch list viewer, ETFs, and you can go to index, contras, right? And in here, you're going to have the levered and the non-levered, but it's pretty quick to determine which are and which aren't. Just sort by percent price change. Start coming down the list here, and you can pretty well already pick out this is the non-levered S&P 500, right? This is the non-levered Dow, okay? They're just slightly making money. But what that does for folks, you get more one-to-one movement. See, leverage comes from the fund managers having to reallocate several times throughout a day. So if those markets aren't really ripping, that leverage actually that's needed to create the bigger percentages on the landslides works against you a bit. So some folks don't like that for that reason, and I totally get that. You can just simply go with these things right here, okay? And those are going to be your non-levered instruments. All right, so all of that hopefully has become quite clear. I think the only decision now at this point is, is this the kind of coaching that you want to receive as an individual, right? And if so, because we do that every day. We've been talking about that head and shoulders pattern literally since it triggered, for example, and where we thought the markets were going once it did. We were talking about the inverse. We've actually showed 6 head and shoulder patterns over the last 18 months, inverse and regular. So along with all the wisdom of the VectorVest platform, so we just add in, a bit of expertise, if you will, in terms of layering that even as a lesser important point. VectorVest leads the way, but as kind of a reinforcement of, sometimes folks need that extra reinforcement to believe that we really have had a trend change here, to believe the markets really are going to continue to decline. It's less likely now than it was 2 weeks ago, and it was less likely then than it was 2 weeks before that, but right now you certainly can't just predict a turnaround. Prediction is a fool's errand. So what we got to do is go with the flow. Flow is down. Flow is down from the big picture. Flow is down from the intraday picture. So there's literally nothing telling you to be buying stocks right now. And hopefully that rings true in terms of value for you, in terms of information, in terms of matter of factness. There's no well, this, and if, but, Now, when you slow down at support, I'll be the first one to tell you, we took a small nibble just to see if the 200-day average was going to hold on the S&P, and at 42, that was a major area, that 4,200. Markets really tried to bounce even more than just that one day, even into the early portions of the next. And we took a nibble at a couple of things, but quickly had to reverse back, to the short side. So anyway, hopefully all of this makes sense, guys. This tool is extremely powerful. Really only showed you the tip of the iceberg today, but largely showed you, the things that we use the most often. We use the market analysis aspects to formulate an objective opinion on which way the market should continue to move when it opens. We monitor that, look for enough data to confirm that, and then place trades that are congruent with that activity. So everything that we do is evidence-based, if you will. Nothing is 100% all the time. We've gone through a slew of 10 or 15 trades ourselves, excuse me, from time to time. That still, even in spite of having all this evidence, can go awry. But it does move the needle. Give me 1 sec, guys. Sorry, I tried to move away as best I could. Got a little bug in the throat. All right, so anyway, we also use Profit Locker to manage our trades. But when you become a member in the room, you're going to largely see that market action typically dictates our outcomes more so than even the stop losses. I get a sip of water there. And so it's kind of a safety net, really, more than anything. And it depends on what we do as to what combinations we use. But generally, they're pretty wide at this point. We do have an automated system that automates all of this, but we're not looking to deploy that again until the market finds some solid footing. And when it does, we'll deploy that again. That system has historically made about, and in real time with real dollars, made about, its highest year was over 100, okay? Has made about 60% returns year on year, automating this type of information. So we are eager to hopefully get a chance to do that. We only like to deploy that in up markets. We just use the wisdom of cherry picking some short positions or buying contras in the downs, okay? Here's what you learned today. At least I hope you did. It's how to keep the wind at your back on your short-term trades. We don't ever trade against the primary wave. We got red on the color guard and red DTIs out in front. The wind at your back is on the short side, okay? If it's green, wind at your back is on the upside. Stress-free way to evolve with the changing market conditions. It's literally just reading the indicators. There's nothing fancy to it, and we do provide some coaching to make sure that you feel comfortable that you're seeing the right things. And it's not something where you have to be in there every day. We'll talk more about the coaching group here in just a split sec. But we are always there when you have questions. So this is not a situation where you can't do it. You absolutely can. But the only thing that we can't do, Glenn, Jerry, or I, is make you want to do it. So you have to decide that for yourself. It's not a question of can or can't. It's a question of want to. And you got to decide if it's what you want to do or not. All right. So we do have several hundred people at this point that come every day, and they have decided they want to do it, and they are doing it. So we hope that you are going to be added to those numbers. There's no such thing as not being able to adapt and thrive. We can show you how to do it. No matter what the market throws at us, there'll be times where, our goal is to move the portfolio values up every month. We are never going to be able to do that. That is an overarching goal. But on average, we move the needle about 8 months every calendar year. Okay. And so if you think about that math, it works out quite well. You got a 30-day trial just to test drive it. We figure in 30 days, that's enough time for you to see the value of the group. If you decide to continue, there's a little bit of a higher cost. I'll take you to that page here that I just put across the bottom. It's www.vectorvest.com/thrive. That'll take you to an order page if you want to be part of this group. We would love to have you come on board. The nice thing about the group now is there is a group chat, so you guys can even talk to one another, which we've seen a lot of value in recently, which is great. Let me just double check, make sure. I checked it earlier and it was up, but yep, it's up there. I'm going to put this into the chat for those on GoToWebinar. Those of you guys on YouTube, man, you guys know how to get to www.vectorvest.com/thrive. You also probably know you don't have to put www anymore, right? So I'll put this out into GoToWebinar though. Help our friends there, and even give them a link that they can click on to get here. Let me just verify that I typed that in right. There we go. Perfect. And when you get here, it will detail the ongoing costs. So it will be $249 a month to continue, or $25.90 a year, which is a substantial discount. I'm not going to go through all this stuff. I showed you what really we focus on in the group. We look a lot at the homepage, the market timing graph, and the Derby. And we try to make the best decisions we can just looking at those three things in VectorVest. All this other stuff, nice to have, don't need it. Okay. Yeah, hopefully that simplifies the offer. And so, hopefully we'll see some of you guys in there. I see a couple of people saying that they can't wait to get started, which is great. We'll see you Monday. I'll be in there. I'll be in there Monday and Tuesday. Then I'm going on a vacation. And I'll be back the following week. Pretty quiet group here otherwise. So I trust everybody will have a great weekend. And, hopefully we'll see some improvement around the globe here. But, gee whiz, sure doesn't look like it's going to evaporate anytime soon, does it? So let's get in this group, guys. Let's see if we can help you out starting the week off next week on Monday, and get you in a good position to thrive and take advantage of what the market does from here. Okay. We'll see you guys soon. Good luck out there. I don't see any questions, so we'll hopefully see you in the room Monday. Good luck, everyone. See you then.